Square making moves on PayPal by acquiring Afterpay for 29 billion.
They are both major players in the booming fintech industry, but it seems like Square is growing a little bit faster than PayPal in the recent years.
Well, do you think Square will continue to outperform the larger rival over the long term?
Let's find out, shall we?
But before we get started, be sure to subscribe so you don't miss any important information from us weekly.
Little recap from last week's video. Intuitive Surgical pulls back about 4.5% after it reached high at 1,033.
Yeah, this stock went up a little over 8% in the last 21 trading days, and it is also up a solid 51% over the last 12 months.
The recent rise can be attributed to the announcement of a 3-to-1 stock split and some nice Q2 number from the earning.
And it's nice to see a small pullback so I can prepare to grab some shares.
There goes my questions. I was going to ask you if you think the stock is going to continue going higher or is a fall imminent. Where's your buy target?
I'm not too sure. The market has been slowly grinding up, but I think anything sub 900 is definitely a buy for me.
I want to give a little bit more time too. I want to initiate my position at the top of the trend line, which is around 960s.
Intuitive Surgical has outperformed the healthcare sector, and I believe they will continue to do so.
I agree. And let's take a quick look at UNH from last week's video as well.
UNH also outperformed the healthcare sector by roughly 10% over the last 12 months.
The stock continued getting rejected at 420. I think if the stock continues to pull back, I would like to get some around 395. What about you?
I started a small position at 408, and I'm ready to double down at around 390, where the 120 MA is.
XLV look a little exhausted from the recent runs. We might see a little sideways consolidation before heading higher.
And just like we said last week, healthcare is not only a defensive play if the overall market pulls back, but big money already is quietly scaling in. Square announced on August 1st that they are acquiring Afterpay for 29 billion.
That's one hefty bill. I think they can buy now and pay after.
That's a good one. That's exactly what Afterpay does.
Yep, it is an Australian company providing buy now pay later services.
After the announcement, Square's stock jumped for 10%, but its rival PayPal dropped on the same day.
And especially for the credit card companies, Mastercard and Visa. Seems like institutions are using Square acquisition as an excuse to take profit from these two.
Yeah, I would agree. Their shares kept sinking for a few more days after.
Why don't we analyze this acquisition and see if Square is now
A better company? Sounds good to me. And if we have time, if Mastercard or Visa are good entries after a tiny pullback.
First thing first, is Afterpay worth the 10% jump for Square shares?
Let's see. Afterpay provides a buy now, pay later service, and it's an industry leader in Australia.
Also, the majority of their customers are from Australia and the US.
Looking at their first half of fiscal 2021, they have over 100% year over year growth almost across all categories.
Also, they hit 13.1 million active customers, at 80% growth year over year. Out of those, they have over 8 million from North America, which is 61 of their total active customers.
And if you look at quarterly growth in the US and the UK, their active customers grew by 20% and 23% respectively compared to Q1 fiscal year 2021, which is quite fast.
It does make you wonder if that number can sustain.
But also, not just on the customer end. In the first half of fiscal year 2021, their active merchants grew to 74.7 thousand retailers now offering Afterpay, which is up 73% compared to first half of FY20.
So whether it's revenues, customer base, or retail growth, Afterpay is doing great.
Yeah, I'm liking what I see here.
And we don't usually talk about this, but I think it is something worth noting. Looking at Afterpay's EBITDA, it has 521% year-over-year growth.
That's a signal of a quality growth company, and they must have a user-friendly platform since their retention rate is over 91% in the first half of FY21.
They are also partnered with Stripe, Stripe accepts Afterpay in the US, Australia, and New Zealand, and will soon be accepting Afterpay in Canada and the UK.
They also work with Squarespace.
In terms of global expansion, underlying sales contribute grew to 51% in the first half of FY21, and the US represents 43% of the total underlying sales.
Looks like they're focusing on the US to grow their business.
They are also looking to expand in EMEA, especially focusing in the Southeast Asia.
Bottom line is Afterpay is a high growing company currently with revenue, profits, and active users all going in the right direction.
Okay, so the number looks good, the fundamental also looks good, but that doesn't mean there's no risk if it operates as an independent company.
Yup, its competitors all have massive user base, established markets, as well as stable financials.
In another word, it's definitely a good news for Afterpay that Squares want to acquire them.
Right. It allows them to get to bigger markets in a much shorter time.
So in Afterpay's view, this acquisition is good for it. But what about from Square's point of view?
Let's start not with the price tag for now and think about the logic behind Square buying Afterpay.
Well, we know that Afterpay's financing option is developed in-house, and the Square did not develop this themselves, but rather choose to buy this tech.
I think there are a few reasons for that. The first one is that PayPal already has this service a year ago and they delivered great numbers.
So Square is kind of late to the party, you mean?
They're pretty late, and check this out. These are all the buy now, pay later providers, so some of Square's competition already offers this.
According to Bank of America, buy now pay later industry will hit 650 billion to 1 trillion USD by 2025, which is about tenfold or 15-fold from now.
Wow, wait, why is that? Don't we already have credit cards to finance our stuff?
You're 100% right, but their interest rate destroy you from 13% to 24%.
Wow, I honestly never noticed. I just pay the statement balance every single time.
Good for you, but a lot of people can't.
I guess. So does PayPal or Square offer less interest rate if you finance?
Yep, much lower actually. That's why they can steal this piece of pie from the credit card giants.
Alright, back to Square. With this industry growing fast, whoever is in first will have a big advantage over their competition, right?
Exactly. So Square has to get in now before all the giants take over the entire cake.
And the second reason for this acquisition is that since Square is not as big as PayPal internationally, if they want to grow fast globally, acquiring another company is definitely the fastest way.
Also, by acquiring Afterpay, an industry leader in Australia, Square can immediately capture international users.
Square also needs to increase the growth rate since Square's Cash App growth is slowing down. So buying Afterpay directly addresses this problem.
Yep, being a growth stock, market expect growth in order to maintaining its high valuations.
I agree. Afterpay's high growth in the US can help Cash App once they are integrated.
Yep, looks like Square is not just buying its tech, but they also want its customer base to get on Square's ecosystem.
And also get them on Cash App too.
I can see that Square really wants to focus on gaining more users, even though they've done a good job on it.
Based on Cornerstone's research, only 13% of Cash App users earn more than 100,000 annually. But looking at buy now, pay later users, 31% of them earn more than 100K in income.
Pretty obvious that Square wants to average up its user income to attract more merchants.
That's pretty smart. Basically saying their users have more disposable income now.
Based on the strategic standpoint, this acquisition looks good for Square.
What do you mean?
There are still some downsides, such as majority of the users for Afterpay are concentrated in the US, Australia, and New Zealand.
Oh, which means Afterpay is not big in other countries.
Not to mention, Afterpay's integration with Cash App is not a guaranteed success. After all, if Square develop a native feature on top of Cash App, the integration would be seamless.
That's true. And lastly is the price tag Square paid for Afterpay.
Square paid 29 billions in all stocks and is their biggest acquisition so far.
If not counting the added customers and revenue growth, it will probably not cost Square 29 billion to develop a buy now pay later feature, right?
But remember, it's all stock, not cash purchases. So it's kind of smart if you think about it in terms of operations. They get to keep all their cash.
Of course. And with the overall overvaluation of these tech stocks, share price definitely has bubble.
Way to use that to their advantages, don't you think? Remember, the market cap is partially determined by the investor sentiments and not actual company valuation.
This is one way to liquidate their shares. But just by looking at the price, they are still overpaid by a lot.
And who doesn't these days? 29 billion is 30 price to sales for 2022.
Square itself is also overvalued, but all stock transactions will still dilute all Square investors' shares.
Even though Afterpay can bring existing customer and high growth to Square, I think there's still certain risks for integrating Afterpay with Cash App.
Right, assuming the integration is seamless, if it does harm PayPal, how?
I mean, it has to, right? To a certain extent.
I agree, not too damaging to PayPal, but more harmful to the credit card companies like Mastercard and Visa, and credit card issuers like Citi, Chase, Bank of America, and Capital One.
Like we mentioned before, credit card interest rate can range from 13% to 24%. If you haven't realized, this is basically robbery.
But buy now, pay later service, as long as customers pay on time, there usually isn't any fee or interest.
So if anything, this acquisition hurts the banks that relies on credit card purchases.
And by extension, hurting MasterCard and Visa, which is why they've been down for a few days.
Back to PayPal. I don't think this will hurt PayPal, since PayPal already has the buy now pay later services.
And PayPal's buy now, pay later service just expanded to Australia too.
Also, Afterpay is pretty expensive. They charge about 4 to 6% commission for merchants plus 30 cents per transactions.
That's higher than PayPal's 2.6 to 3.6% plus 30 cents per transaction.
And higher than credit cards 1.5 to 3.5% processing fees.
Okay then, why would merchants choose Afterpay and pay about 6% when they can just choose PayPal for about 3.5% total fee to use all PayPal's features, including the buy now, pay later?
That's why PayPal already has 55% of the market share.
But if you're a Square lover, don't be discouraged either. Not every merchant will work with PayPal or even qualifies to work for PayPal.
Right, and not every customer likes or is used to using PayPal.
And another reason it doesn't hurt PayPal is that because PayPal has been in the market for over a year for the feature, so they do have their loyal customer base.
Well, last reason, buy now, pay later is nothing news anymore. Apple and other e-commerce platform also has their own features similar to this.
So if you're a merchant, you're going to pick the most popular payment method.
Exactly, so you can maximize conversion rates.
You know, not just Square and PayPal, MasterCard and Visa are also working on BNPL feature.
Yeah, like Visa, they are developing APIs to manage BNPL for banks.
So I think the drops lately for MA and Visa are some overreaction.
Plus, those two fundamentals are solid. With economic recovery, these two will be just fine.
So now that we covered this acquisition, where would you be interested in getting Square or PayPal?
You can't go wrong with either of these two. They both are leader in the digital payment space. If I have to choose, I will probably go for the granddaddy of fintech, PayPal, just because the company has a longer track record and earning history, less debt to equity, and has more cash flow. Much of that is because Square is still a new player in the game and still investing heavily in the business. So if you ask me, I can buy either or company at the current price.
All right, I think PayPal is looking close to for me to enter, so we'll keep watch, and let's quickly go over the market.
Okay, the Dow Jones and the S&P eke out another record close for the week.
Nothing much about this market anymore, but I'd like to point out the VIX has finally closed the gap on July 2nd, so keep your eyes on this indicator.
Good catch, and the small cap also dropped about 1% on Friday.
While the S&P is making new highs, the overall market breadth is not looking so hot either. The first support I want to point out for the S&P 500 is around 4,422.
And for the Nasdaq, the price got rejected multiple times at the overhead resistance at 15,155 and recently broke down on the uptrend trend line.